Hi, my name is Josefa Huber. I'm a US CPA handling US tax returns for people living abroad, and I'm sitting here with my friend and colleague Hannah Rusik, who is an IRS enrolled agent, also known as EA. And we would like to talk to you about what you should be looking for before you hire a tax professional. This is something that we've both become, I think most qualified preparers have become passionate and frustrated with, because with all the money the IRS is giving away these days, there are many more unscrupulous quote unquote tax preparers flooding the market. So we want to tell you what you should be looking for. Welcome, Hannah.
Thank you.
So first of all, the very, very minimum, I won't even call it qualification, absolute minimum is that whoever is filing your tax return, whoever is preparing your tax return, if you pay them a penny, if you bake them bread, anything, if you are giving them some sort of compensation to prepare your tax return, they must have a PTIN, a preparer taxpayer identification number. That is the absolute minimum. It does not mean they went to any sort of college or have any real qualifications. It simply means they registered with the IRS. And one reason that's so important is because if they do something wrong, or if they've been doing something wrong for years and years and years, the IRS can't track them without that number. So that is the absolute minimum. You know right away, if someone doesn't have a PTIN, they are illegally preparing tax returns. So that's the minimum. So what are the qualifications that we would recommend you actually be looking at? So one is a CPA. A CPA is a much broader area of education. It is licensed by state boards of accountancy. So if you want to check up on someone's license, you probably will need to know not only their license number or name. Name is probably good enough, but you need to know under what state they are registered. And then you probably need to go to the individual state board to look that up if you really want to check on that. CPAs are required to do about twice as much continuing education as enrolled agents. It's usually an average of 40 hours a year. Some states require more, some states require less, but the average is about 40 hours a year. And they would have had to pass an exam once in their lifetime, a 4-part exam, which covers a wide variety of topics, including auditing and things that you might not need just to do your taxes. And they also probably have at least an undergraduate degree in accounting, but at minimum, they would have needed probably at least 120 to 150 hours of college, university, or university level education, and some minimum, a good amount of those would have had to be in accounting topics. And then they do have to usually remain licensed on an annual basis. For most states, they're paying an annual fee and reporting to the state on an annual basis. I'll let Hannah explain what an enrolled agent is.
Thank you. So the enrolled agent is an IRS qualification. This requires enrolled agents to do a 3-part exam, which covers different areas of US tax. In addition, enrolled agents do 24 hours a year of continuing professional education, which needs to be reported to the IRS on a sort of continual cycle.
So one thing that's important when you're hiring an accountant, especially someone who's going to be doing your taxes long term, is it's good if that person can what's called represent you in front of the IRS. Very generally speaking, that would mean if you have a problem, they can speak on your behalf. That's really a very vast simplification, but sort of in general. A CPA or an EA can call the IRS on your behalf. Their qualifications are such. In addition to EAs and CPAs, an attorney can also represent you in front of the IRS, and attorneys do taxes. My personal, based on my experience, I don't generally consider it to be the best qualification for preparing taxes, but it's a very high level qualification, obviously. And attorneys are licensed by state courts. They have continuing education requirements, but not necessarily in taxation. So if you have an attorney who's handling your estate and other things like that, and they might think they're doing you a favor by also preparing your taxes, they might not have quite as much experience as someone who's preparing taxes for someone like you every single day. So think about that. They could be great, but also they might not have the experience in your kind of preparation. Hannah, can you tell us about annual filing season program for participants?
Yes, so this is a course that can be taken every year. There's an annual exam and it keeps people up to date with the IRS. The only thing is that the participants in this program aren't able to represent before the IRS, which means they can't make calls on behalf, they can't sign power of attorneys. So it's a more limited type of.
And then you can see on the screen, and I'll post that also in the notes. This is a website where you can look up that someone has a PTIN. When you look that up, it will also say there if somebody is a CPA or an EA or some whatever qualification they have. Keep in mind, if you know someone by a different name, that it is possible that they are registered and they go by a different name. If you want to look them up, you might need to ask them what their legal name is or what their PTIN is registered under or where they're registered. You might want to check if they work in another country. You might want to also check the US. Maybe they're registered in the US. But anybody who you pay any penny or anything, any compensation, any favor to do your taxes should be listed here. The next thing I really think is good to think about is what is their specialty, because whatever their specialty is, that's where they're putting their education hours. If I have 40 plus hours that I need to spend doing education, I am going to most likely be learning about the things that impact most of my clients. So if I do 200, 300, 400 individual tax returns a year and 2 business tax returns, I'm probably not going to want to spend a whole lot of time learning business tax returns. And then you can also try to get an idea of how many clients they handle who are like you. For example, if you live in Israel, you want somebody who is handling people living in Israel a lot, like every single week. You want them to be seeing Israeli income statements. You want them to be thinking about the Israeli tax treaty. And there are certain countries where it's very difficult to find someone who does a huge quantity of that. But if you're living in Israel, that shouldn't be difficult. There's a lot of accountants in Israel who are handling this every single day. Here are some red flags that Hannah and I put together. Most of these things are illegal. Almost everything on this list. If you are hiring somebody to do your taxes and they do any of these things, it's completely illegal. Whether or not you want to report them to the IRS is up to you, but you shouldn't be paying them money to do your taxes. And we'll discuss why that's a problem. So number 1 is not signing the tax return and not including a PTIN. So you can see I have a little screenshot here near the top. That's what the bottom of your tax return should look like. That's the place where if you were filing on paper, you would be signing your tax return. So if the tax preparer is electronically filing, they're not required to sign. They could have their name printed here, totally legal, but there must be a PTIN. If you're electronically filing, if you're paper filing, whatever it is, on the current format of the tax return, I believe it's at the bottom of page 2. In 2018, it was at the bottom of page 1. Every other year that I know of, it was the bottom of page 2. So look for that. They should have their full name or their firm name. It must have a PTIN, and the PTIN should be a P followed by 8 digits. It shouldn't be a social security number, anything that looks like a social security number. I've seen that. They need to provide you with a full tax return, not just the signature page, the full tax return, minimum 2 pages for most people to make closer to 10, could be 50, depends on your situation. But they need to provide you with a full tax return. It might be after you pay them, but they should provide it and they should be willing to answer your questions. If they tell you, trust me, and they don't want to answer your questions, it's not illegal, but I consider that a red flag. Using off-the-shelf software is totally illegal. Your tax preparer should not be using TurboTax. They may be using another Intuit product, the same company that makes TurboTax, but they should not be using TurboTax that is on the IRS's website. It's illegal. And they should not be using the IRS free file. And it shouldn't say at the bottom, self-prepared. That the IRS looks at this, they believe you prepared it yourself. Claiming of false credentials or vague qualifications is also very problematic. You want to make sure that someone is currently licensed in whatever they claim to be. If someone is claiming to be an enrolled agent, it can be take a little bit longer to figure that out. If you really do want to check on that, you have to email the IRS. But generally, they should be claiming a qualification that is actually a qualification. So if they're claiming to be a registered accountant, that's not a thing. I'm not familiar with any sort of IRS registered accountant. We listed on a previous slide all the official qualifications. Registered accountant is not something that the IRS has recognized, at least not in the past 10 years that I'm aware of. And, again, like several years tax filing experience, tax filing experience could be anything. You want someone who has experience with the types of returns that you are doing, like, 10 years of individual taxation experience or international taxation experience.
So a big thing that's affected a lot of taxpayers in the past is when they've been recommended by an accountant to either invent income or invent deductions. So either boosting your income or claiming extra expenses can temporarily give a larger refund on the tax return. There's a number of problems with that, not least if the IRS catches it. And if that's being recommended by an accountant, then you really want to seriously question what is going on, why that would be recommended. The next point about receiving the refund in their own bank account, this is not allowed at all according to the IRS rules. And again, you want to question why that would be necessary or why that would be happening.
Yeah, there is an official option to pay by refund, something like that. It's not something that is usually used by people outside the U.S. because it's difficult to set up. That is an option. That is a legal option, but their bank account number absolutely should not appear on your tax return. So if you see the screenshot here, a few lines above where you would see that, near the bottom of the second page, if you're getting a refund by direct deposit, you should see your bank account routing number and account number on there, nobody else's, and you want to check that that's accurate.
It's also important not to use a family member's bank account there, because if too many refunds are deposited into a bank account, the IRS will flag it and will prevent that happening.
Right. Yeah, I've seen people online who, say, well, I use my mom's account because I don't have one. Now she won't give me my refund. How can I, report her to the IRS? Well, you gave the IRS her account number. Come on. Whatever account number is on that tax return, you signed it. You're agreeing that that's where you want your refund to go. You're basically telling the IRS that's my account. You don't want to then go to the IRS and say that's not really my account. I lied. Also, if they give you the option whether or not you want to report income that was actually income, like let's say you had a small business and you earned, $300 from it. If they say, oh, it's nothing, you don't really need to report it, be careful. I mean, it's illegal. It's anything over 50 cents should really be reported. The inability to e-file. So I have a star next to that. That's not illegal necessarily. A tax preparer who files over, I think it's like 20 tax returns or something, is required to e-file unless they have a specific reason why they can't. And if they have a reason why they can't, they need a document, a page with the tax return that explains why they can't. And there's very few legitimate reasons. They could write anything that they want on that form, but in most cases, an experienced tax preparer who's filing a lot of tax returns like yours will be able to e-file it in most cases. It is form 8948. I happen to have one in front of me from another preparer.
One of the main reasons that you might not be able to e-file your tax return if it's being prepared legitimately is if it's being prepared too late in the year. So the IRS tends to shut down e-file in about November, somewhere in the middle of November, but you may have filed an extension until December 15th. If you're filing in that month, that's one of the things I always mention to my clients is I much prefer not to file in that final month. If there's a strong reason why you need to be filing in that month, then you are going to need to paper file. And there's a couple of other reasons why you might need to paper file, for example, in certain cases of ID verification from the IRS, but these will be cases where you've received a letter or you've discussed the very specific reasons together with your accountant.
Right. There are reasons you might discuss with your accountant why it's good in your situation. Also, let's say you have passive foreign investment companies. Not all softwares can support e-filing that. Of course, you do want to make sure you're using a preparer who's very experienced because that is complicated, but that it's possible that you can't e-file that, or if you have a certain number of a certain kind of form. Also, as far as filing past the e-file season, I would really, really recommend you do whatever is in your power not to do that. The IRS has a mountain of unopened mail, and it can really mess up your whole file if things just are taking forever to get processed. So really, it is worthwhile to use somebody who can e-file. There are legitimate reasons to not e-file, but most tax preparers who are really doing a good body of work, a good turnover of work, especially, if they're licensed and everything, most can e-file.
IRS also has a lot of great resources online. If you Google, the IRS actually calls preparers who don't sign ghost preparers,
yes,
which is quite a good name for it. There's a lot of resources online with the IRS, and they are very helpful.
Hiring a ghost preparer, someone who's doesn't have a PTIN, doesn't sign the tax return, is very dangerous. And so here are just a few of the consequences. You want to take over here, Hannah?
Sure. So one of the first consequences that we'd be aware of is if the IRS decides to correct the tax return, they can go back up to 6 years and they can apply penalties and interest. That could mean that if a credit was overclaimed, they could be charging a penalty and interest on the amount that they're now claiming back. If there were errors either in the classification of the income, in the amount of income reported, the IRS can go back and ask for supporting documentation for proof, and it's not guaranteed that the IRS will accept everything that's submitted at that point. Then we come to disallowance of future credits. This is a pretty serious IRS consequence, and it usually relates to refundable credits. For people living outside of the US, the main one will be the child tax credit. It's also a big area for concern with claims of the earned income credit, which only really applies to people who live in the US.
Yeah, if you live abroad and you're claiming the earned income credit, don't do that. That is not good. If you have a preparer that says it's okay if you have a US address or you can use their New York address or something, that's completely fraudulent. And also, the child tax credit is based on earned income. So not a stipend, not a scholarship, not, it has to be earned income. So if they're calling something that's not earned income, or if they're suggesting that you have someone pay you for work you're not really doing just to have that, that's also fraudulent.
This used to happen a lot more, unfortunately. People would say, you could say, you get income, you get some money from your parents, you could call it income just for the purposes of the credit. Unfortunately, the IRS, well, fortunately and unfortunately, the IRS is very aware of these things. They know exactly which forms to ask for. They know the names of the Israeli forms, and they will often audit this, and they will often be able to spot anything that's going on.
It's also a really good reason to be careful that you're using a careful and qualified accountant, even if they do have a PTIN, because the IRS can track that PTIN. So if they find that one accountant has committed a certain something fraudulent a number of times, they might decide to audit all of their taxes, or they might decide to audit everybody within certain zip codes if your neighbors are, certain people in a certain community, and they've done that, have committed something inappropriate. So by using an accountant who's doing things that are inappropriate, even if your tax return is okay, it can be dangerous for you.
If someone claims a credit which they're not entitled to, not only will they need to pay back the credit with interest and potential penalties, they also may be disallowed from claiming that credit in future years. The IRS determines that it was fraud, even if they would otherwise be 100% eligible for the credit, you're locked out for 10 years. And once you become eligible again, there's additional reporting that's required.
If you're using a registered pay preparer and you're claiming refunds, that preparer is required to do a due diligence checklist. They ask you a number of questions. They likely might keep scans of social security cards or photo IDs, things like that. And so there are penalties for preparers who claim credits that they shouldn't be claimed. But if you're using somebody who is not currently registered, and especially someone who lives outside the US, it's very hard for the IRS to catch them. So you are likely to have penalties where the preparer can just go on continuing to take money from people without, being very careful about anything. According to the IRS, it's the taxpayer's responsibility. It's your responsibility to make sure that you're using a preparer who's qualified for your situation. So if you have a business, you need a preparer who's qualified to handle that kind of a business. If you live abroad, you're required by the IRS to find a preparer who is qualified in that area. So, or all the more so, they don't have a lot of sympathy for people preparing their own tax returns. I do get a lot of people come to me and say, well, I read all the rules every year. I read all the instructions. It's impossible. You don't know what you're missing. And they come to me and they didn't realize a lot of things that were supposed to be reported. And the IRS doesn't have a ton of sympathy for that. So if you're using a preparer who is, maybe only has the seasonal, takes like just the seasonal course and isn't really experienced in the kind of filing that you might have, they probably won't know all the questions they need to ask, and you could really be missing things. And the IRS isn't going to have a lot of sympathy for that. So it really is your responsibility to hire somebody with who is certified and who meets your needs. And another thing to watch out for is the price too good to be true? And it's the same with anything you buy. You buy clothing and you might want to think, well, the only way that this could have been made is by people in a sweatshop based on the price, the fee that they're selling it for. And it's the same with the preparers. You have to think, I have annual fees I have to pay to my state. I have continuing education I have to perform. I have insurance I need to buy, and staff. So you have to think, if the price is too good to be true, are they paying for insurance? Are they keeping up their licenses? How much time do they possibly have to look at your tax return? So if the fee is too good to be true, usually something has to give. Sometimes it's the service, and you might not care about the service, but a lot of times it's that there is not a qualified CPA or EA putting their eyes on that tax return before it gets filed. So you keep that in mind and be aware of that. The final thing I want to leave with is it's really important to have an accountant you're comfortable speaking with, because if you're not comfortable calling your accountant when you have a question, you're not going to ask questions, and you're more likely to get in a situation or do something without consulting an accountant, and the consequences of that could be worse. You invest in something that's not appropriate for your needs and you end up paying a lot more taxes. So you really need an accountant who you're comfortable with, who doesn't scare you. And in my recommendation, somebody who is answering their phone all year long, or, answering emails all year long, not somebody who's just, handing off your tax return and running. Thank you so much for joining us. Good luck hiring the professional who is best for your situation, getting the maximum refunds that you're legally entitled to, and understanding what you're filing.